I'd like to ask you, Jonathan Tuttle, what is the biggest risk?
Sure, sure. No, that's a great question. Like, definitely, one thing we try to do is mitigate risk, and that's one of the reasons we call ourselves as the safest risk-adjusted return in real estate. Uh, I mean, it's historically been really low, but the biggest challenges are like could be the city if it's a small city and not allowing you when you're purchasing, making sure that they don't allow uh, to not allow you to basically transfer ownership of it, or you can't bring in new units, which I mentioned with the setbacks. We're not doing coastal, so we don't have to worry about hurricanes and flooding and things of that nature. Making sure you're not in a flood zone, because even though you're 32, 36 inches off the ground, you still want to be in a like next to the Mississippi River, and it goes over the house. And then California, obviously, we're trying to be away from California with the fires. So we like the Midwest. We don't have as many challenges. It's usually more snow related stuff, and that's it could be accidents, cars driving through. And our industry specifically has a lot of insurance is really tight. Like you can't even have certain dog breeds because our pools or trampolines, they're really stringent and like what could be allowed in a park before they'll even do an insurance on the park asset, because like a dog bite or a kid falling off a trampoline or breaking his neck, it's the park owner has a multi-million-dollar asset, they'll get money off of that, obviously. The other challenge, I guess, would be it could be rent control. We're fortunate enough to be in states that really don't have rent control, and we identify that. But long term, and even in like multifamily or any real estate investing, rent control is going to be a big issue, because people have to look at two ways. When the investor comes in, taxes always go up. Maintaining things, just think of anything you buy, anything after you have it 10, 20, 30 years, your car, your house, your HVAC goes out, your roofing breaks down, your car, the engine, whatever, your brakes, there's always routine maintenance. And if you can't raise your rent in accordance to A, inflation, B, to also maintain the capital expenses that need to be put back into the asset over time, the parks, or in real estate, quality is going to go down. The park owner or the real estate owner is going to be like, I can't even make a profit on this if I can't maintain rents to pay A, to keep up the inflation, and B, to maintain this asset. There's going to become slumlords. So that's kind of like an issue. It's kind of find that happy medium. The rent control could be a big issue. I know because you guys did something, but it was like 8 or 10%, right? It was like percentage, and then it was a percentage above inflation. They factored it in. I forgot exactly. I think it was 8 or 9%. I think with Oregon, but which is fair for both sides. But because that's still the average mobile home park rent increase is like 4%. So it's basically a little bit above inflation. So it's not like the big issue is some people here, the private equity comes in and they buy some mom and pop. They've had it for 30 years. And remember, like I said, they don't care because they have millions of dollars in the bank. They have $300 lot rent. And private equity, Wall Street comes in like, well, let's charge 600 because we can. So then that goes around, and then the local government's like, oh, you raise the rent double. This is not fair. Which, yeah, I mean, we try to do, 25, 50, whatever is reasonable, and also put in improvements. They come in and like double it. It gives a bad name. And then, of course, they have these huge returns to their investors. That's why if you Google some of the articles, like manufactured mobile home parks have had crazy returns because people have had the assets for 30 years. It's supply and demand. You can't develop them. And then you control the price of like what you want to charge for rent because there's nothing cheaper. So let's find that happy balance. And I think that goes back to the whole risk is like, as long as governments don't come down to rent, because rent is the biggest driver of the NOI. So that's the biggest risk for sure. It's future regulation.